This is Alan Bush with the Financial Futures Forecast for Tuesday, March 17th. In the stock index futures, we are seeing prices a little bit lower this morning. We did have housing starts coming in on the weak side, falling 17%, although building permits were a little bit better than anticipated. I think we'll probably see a sideways trade today and early tomorrow with the Fed meeting scheduled for today and tomorrow. Once the meeting is out of the way, I think we can see the bull market resume in stock indices. Over in the foreign currencies, we are seeing the dollar index a little bit lower. Much of this linked to the weaker than expected economic reports over the last couple of days. Last week it was retail sales that surprised on the downside. Today we had actually a couple of economic reports, especially the housing starts that was a bit on the weak side. But keep in mind that the Fed is the most hawkish of all of the central banks, at least all of the major central banks. And I think that that will, in the longer term, underpin the value of the dollar and keep the bull market intact for the dollar index. We are seeing some gains in the euro currency, even though we did have some weaker than expected economic news in Germany. Also seeing the pound trading a little bit lower. Some concern that the May 7th general elections in the UK will result in no clear winner, so some election uncertainties having a negative influence in the British pound this morning. Longer term, though, we do feel that the pound will gain on the euro, which is not the case today, mainly because the Bank of England is the second most hawkish of the major central banks after the Fed, while we have the ECB embarking recently on a new quantitative easing program. And over in the interest rate markets, we'll finish up in that financial market. We are seeing prices higher, especially at the long end. The 30-year and 10-year firming with the housing starts report coming in as weak as it did. Also starting to see more of a tendency, I think, on the part of traders thinking that the Fed may possibly be delaying a rate increase, even though there is some talk that the Fed could eliminate the term patient from their statement at their statement that will take place tomorrow after the FOMC meeting is out of the way. So longer term, still looks like the long end of the curve will probably remain in a bull market. So have a good trading day, everyone. And once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.